Derivatives trading involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results.
So stressful when the world's on fire. Good gosh. I can't look at this, guys. Like, my strategy is you buy it and you hope that you gotta get spotted. Yeah, but we all think you're crazy. You don't fight this. No way. The markets are freaking out and you don't think that anything is wrong? Come back tomorrow and I'll lose it all. Should be fun. Oh, I'm muted. I muted myself. I knew something was wrong here. Oh, and I'm not hearing the music. I need to turn on voice meter. Okay, Federal Reserve meeting coming up here in 5 minutes. Already seeing the liquidity pulling. There is a little bit of selling out here in the treasuries. Not that it matters anymore. Nothing matters because apparently unidentified aerial phenomena are a thing. And the government has a UAP retrieval program, and they have retrieved, quote, biologics from these vehicles, and so nothing matters. Just let the existential dread just wash over you. Yes, we will stream during the Powell speech. That is what we're here for. And I may have to kind of come out and check on things. So there may be some times where I'm a little quieter, but hi, by the way, yeah. Cool, new version. So can I show you something crazy like this? So what I'm on right now. Okay, go to reddit.com. Okay, so this morning at 10 a.m. Eastern time, there was a congressional hearing with this guy that has been blowing the whistle on the whole UAP program, right? And in the in the hearing, he says that the USG is operating a crash retrieval and reverse engineering program. Wow. Okay. Now look at Lockheed Martin when it started. When the hearing started. They were selling into the hearing and then reversed. Coincidence? Okay, we got 30 seconds here to the Federal Reserve. We're expecting a quarter basis point hike. It looks like the market is ready for this to be like chaos. Okay, it is a 25 basis point hike. I think like these micros are just Okay, so sounds like they changed the statement by quite a bit. Here's Nick Timoros's comment. The Federal Reserve unanimously raised rates by a quarter percentage point. The FOMC statement had very few changes. They just changed the holding the target range steady at this meeting allows the committee to assess additional information and its implications on monetary policy. They changed that to the committee will continue to assess additional information. That is the only change. That actually seems like that could be a change that could be more significant than it might appear on its face. But that kind of seems like it's like, yeah, we don't really think we're on good track. We don't really want to change anything. But we are concerned about inflation. Okay, so the dollar taking a bit of a dive on that. It's about 20 cents. It's not like the end of the world, but the dollar is moving. So this is kind of what I'm talking about when I say I wouldn't recommend. I don't like to trade the actual statement because you can, even if there was nothing really unexpected or unusual in the statement, you still get like lots of activity, and this activity is often seemingly random. I'm not surprised to see the treasuries push up a little bit because it did seem that people were going short into the meeting, so that's probably just them covering, right? Well, so there was a little bit of an initial move down and a really strong pushback in the treasury, and they're a little bit higher than they were, but for the most part, it's ending up being a nothing burger. Now, the press conference, that could be a different thing altogether, right? They used to change the statement a lot more. I feel like that the press conference is basically taken the place of the statement, because they have barely changed the statement in like a year. What is this? So I'm reading more UFO stuff. What is this NHI? Non-human intelligences, yes. Okay. Oh, it's still moving a little bit. It's still moving a little bit. Hmm. I think it might settle back down to 24. I don't know. It's kind of playing around. It wasn't actually that much of a change in cumulative delta and everything though, so a little suspicious here. It kind of makes me think that there could be fireworks during the press conference because this seems a little bit fishy. Could be that people get shifted out of positions during the press conference. Sinead O'Connor died? Oh dear. That's sad. Stay focused here, Brad. We're talking about aliens. The big news today is the aliens. That's no. You shouldn't be so callous. And keeping an eye here on gold and wheat. So wheat is down 5% today. Corn is down 3%. Biggest winner so far, silver at 6%. So Hmm. I'm gonna clear that. Is it possible to pay to have a reporter record what Powell is saying and transmit the audio over a connection that is faster than the public video stream? So I have that. I think you probably could. Yeah, I think you probably could. I find the YouTube stream is maybe a little bit behind what the TV is, but the TV is pretty fast. I think that the TV is instant, so I could. Although, like, that's kind of one of the issues, though, with the Federal Reserve meeting, is that the reaction to his comments, because not everybody gets it at, like, exactly the same time, it can be a little bit difficult sometimes to single in on exactly what it was that he said that kind of triggered the action, right? Especially with a lot of the noise that happens during the meeting anyways, you know? Like, I'm not saying sometimes it's like he says something and it just like it changes the game, right? But Powell is starting to get pretty good at avoiding those sorts of things, right? His whole goal is to go out there and not say anything important. You realize? So what about filming and running the video through the AI software that analyzes his body? Yeah, I don't think that would provide an. Guys, you got to realize that the market overreacts to what happens at this meeting today. Like, almost always the situation is you have all of these traders. They're sitting here with itchy trigger fingers, waiting for him to say something that they can possibly turn into a trade, because they know that those can turn into big trades. And then it just kind of will become its own self-fulfilling prophecy, and it just takes off. And they can latch on to the most seemingly insignificant statement or body language. And so it is all the time. It is all the time that the market makes a big deal out of things that are completely irrelevant. Like frankly, completely irrelevant. So you got to be really cautious about the Federal Reserve, because the way that it moves is just like, even if you're right, sometimes you can get crushed because it moves so much, right? And a lot of people, what I've seen some traders, new traders do, is they'll come in and they'll see Powell say something, and they'll see the market react to it, and they'll be like, okay, that's it. Like, that's the thing now. And that's what the market thinks of the change in the Federal Reserve. And that's the narrative that I'm going to be going with for the next month. And then, like, the next day it gets completely wiped out, right? Like, the market does the exact opposite of what we thought in the Federal Reserve meeting, okay? Like, the day that Powell announced quantitative tightening, QE2, right? The market sold off. They said, this is bad for the financial system, and things must really not be going very well if they feel the need to do this. And the S&P 500 closed the day down, and that was the single best buy location ever for anything, right? And after market, like, the smart money bought it up. We're dependent on you to make the big money. Well, I'm watching the same YouTube live stream you are. I'm probably not going to touch it today. I think, like, here in this location where we're supposedly at an inflection point, you know, I think it's going to be particularly difficult to trade this. So he says something positive to get his speech over with. Well, man, I tell you what, what was it, like 2 meetings ago, where he kind of stumbled a little bit, and the handlers were like, okay, that's it. That's the last question. Sorry, gotta go now. But like that's the thing is public speaking is not Jay Powell's forte. Like, when the opening came up, when Trump was like, okay, we're not going to keep yelling, we want a Republican in there and all that stuff, right? Like, Powell was not the guy that everybody thought would become the head. Let's just put it that way, right? And I mean, he's an economist. He's a wonk. He's a wonk. When you listen to his answers, like, I think it's so brilliant just because, you know, he has such a strong understanding of the economics behind interest rates and central banking and so forth. And that's what he's really interested in. And so when he talks about it, you can just tell, you know, how much he knows about it. And that's where the real value in these come from, is kind of learning how they view these things, and so that you can kind of make judgments about how the Federal Reserve will interpret certain pieces of data and stuff, you know? But he was not good at the talking bit, which is frankly the exact opposite of what you get from the ECB president Lagarde right now, right? Where she is a really good PR person. She's really good at the speaking. I'm not going to say that she doesn't know anything about economics. This is certainly not true, but she's definitely not as strong as, say, like Jay Powell is, right? That's not her forte. I think the reason they picked her was because they wanted somebody that would be good at communicating the message. Kind of because people felt that Powell didn't do a good job at communicating the message, right? But so there's been many cases where he said something and the market overreacted to it, and the Federal Reserve was very upset with it. Like, I can remember 3 or 4 ago where, you know, the next day you had Fed speakers pushing, like, all of a sudden they're on the TV pushing against the way that the market reacted to his comments, right? So like, they immediately tried to walk back something that he said. And it was what he said was something trivial, and I felt that the market picking up on it and running it with it was silly. But yeah, that happens every freaking time. And so Powell has been practicing. I think that he's been specifically practicing. He's been getting good at this, and he's able to give like those politician answers and stuff. This is where you get like a whole hour, and he teaches you all of this stuff about economics and stuff, but then he doesn't actually really reveal anything new to you about what the Federal Reserve's thinking is. Right? His goal is to avoid having anything like that in it. Now, one thing that does happen is he will have his little, like, at the beginning of his speech, he kind of gives us, like, their view of the current economy and so forth. And sometimes the market moves on that a lot. So that'd be the next thing to keep an eye on. Something in his coffee. I think there's easier ways to make money. I'm telling you, man. Here's my crazy trade. It's a crazy trade, by the way. Don't take this trade, okay? But Lockheed Martin probably has a UFO. That's my bet. My bet is Lockheed Martin has a UFO. So here's the question. Okay. Is that good or bad for Lockheed Martin Corporation? Because on one hand, that means that Lockheed Martin is keeping information from Congress. That's like a big deal. Congress ain't going to be happy about that. On the other hand, they have an effing UFO with alien technology that they can reverse engineer to like fly across the universe instantly. Like, that kind of sounds valuable to me. So is that a buy? You buy Lockheed Martin? Well, it sure is an expensive stock, I tell you that much. But you know, it's kind of it's I'd say it's in a pretty okay spot to buy it. Who's the guy? Okay, so the guy that said all this stuff is Mr. Gorsuch. So is that? Yeah, David. Sorry, not Gorsuch. Grush. David Grush, who was a basically he was tasked to look into the unidentified aerial phenomenon thing. And as he started doing research, he got information from people saying, oh, there's this program and this program, but it's a secret. And then when he would go to try and get the information, they'd say, oh, no, you're not allowed to look at that. Even though that's like exactly what he was looking for. Right. So then he comes to Congress. Let me just show you the video, dude. This is just like this whole thing is just crazy.
And civilian capacities. I was informed in the course of my official duties of a multi-decade UAP crash retrieval and reverse engineering program, to which I was denied access to those additional read-ons when I requested it.
Like I play that as many times as I can, and I'm like, that can't be real. Like, I'm missing something here. That's not what he really meant. This week, you know, like, I'm in denial, man. The USA has made them at Area 51. Well, he says it's a multi-decade program
with Chair Powell.
Which means that maybe all of the UFO conspiracy theorists have been right, and that they have been reverse engineering UFOs for 50 years. Like, you think that's unlikely? I don't know. So something else that's been happening is that there have been people posting on Reddit and 4chan and stuff like that being like, oh yeah, I was involved in that UFO retrieval program, and here's what we know about the aliens. And like, all of these stories kind of match up with each other. So it kind of looks to me like it's a LARP. Like, they're reading other people's stuff, and so they're making up their own stuff to try and be, consistent with each other. It's crazy.
U.S. Senate Majority Leader Schumer says he is worried about House Republicans heading.
They all say that the aliens are like the tiny gray aliens that everybody always imagines. Yeah, that it's but this guy, David Grush, is not LARPing. That's where it's crazy is if there was anybody in the government that would be able to, quote, blow the whistle to Congress on that, parts of the military industrial complex are retrieving and reverse engineering UFOs without telling Congress about it, right? This is the guy that would be able to do it. That's it. So that's your and look, I'm just telling you. I know it's crazy. I know it's crazy. Okay, but look at the freaking stock. Like, people are clearly trading on it. Going into the meeting, they were selling it, and then afterwards it was buying. Because they're like, they think that Lockheed Martin is going to get censured or something. I'm going to be like, so if they do have one, I'm going to be like, you know what? Like, I know you kept this from us. I forgive you. I'm going to forgive them. Hey, thanks, Sebastian. I'm glad we're talking about the Federal Reserve meeting. We got a good game plan here. We do have 3 minutes. I only get to talk about UFOs for 3 minutes. But all I'm saying is, okay, maybe if there are aliens, I don't know, of course, but maybe Lockheed Martin has an UFO is the first thing. And then the second thing is, nothing matters anyways, right? Life is pointless. Just let the existential dread take over. That's the inevitable conclusion, I think, if aliens are proven true. Maybe not. Maybe humankind finds like some new purpose in its place in the universe or something. I don't know. It'll definitely be interesting to watch, though. Okay, so let's close all this stuff and put this into theater mode. We've got about 10 minutes. I will put him up here in the corner in place of the S&P 500. Well, you know enough about the science to know it's unlikely. Yeah, well, that's the thing that they keep telling us is like, well, how did they get here? You can't travel faster than light, etc., etc. So that was a stop run.
Expecting the FOMC press conference with Chair Powell to begin. And the live videos available.
Kind of interesting that the treasuries are kind of sinking as this goes along. A little bit of a stop run there, but not too crazy. They haven't broken 21 yet. Oh, you're not going to stick around for the press conference? It's just about to start. Oh, yeah, sounds good.
So Fed's Powell starting the press conference.
Will you trade this live? I think it's unlikely, but we'll see. Okay, here it comes.
So Powell says FOMC is squarely focused on the dual mandate.
Good afternoon.
Let's turn that off.
My colleagues and I remain squarely focused on our dual mandate to promote maximum employment and stable prices for the American people. We understand the hardship that high inflation is causing, and we remain strongly committed to bringing inflation back down to our 2% goal. Price stability is the responsibility of the Federal Reserve. Without price stability, the economy doesn't work for anyone. In particular, without price stability, we will not achieve a sustained period of strong labor market conditions that benefit all. Since early last year, the FOMC has significantly tightened the stance of monetary policy. Today, we took another step by raising our policy interest rate a 1/4 percentage point, and we are continuing to reduce our securities holdings at a brisk pace. We've covered a lot of ground, and the full effects of our tightening have yet to be felt. Looking ahead, we will continue to take a data-dependent approach in determining the extent of additional policy firming that may be appropriate. I'll have more to say about monetary policy after briefly reviewing economic developments. Recent indicators suggest that economic activity has been expanding at a moderate pace. Growth in consumer spending appears to have slowed from earlier in the year. Although activity in the housing sector has picked up somewhat, it remains well below levels of a year ago, largely reflecting higher mortgage rates. And higher interest rates and slower growth also appear to be weighing on business fixed investment. The labor market remains very tight. Over the past 3 months, job gains averaged 244,000 jobs per month, a pace below that seen earlier in the year, but still a strong pace. The unemployment rate remains low at 3.6%. There are some continuing signs that supply and demand in the labor market are coming into better balance. The labor force participation rate has moved up since last year, particularly for individuals aged 25 to 54 years. Nominal wage growth has shown some signs of easing, and job vacancies have declined so far this year. While the jobs to workers gap has narrowed, labor demand still substantially exceeds the supply of available workers. Inflation remains well above our longer-run goal of 2%. Over the 12 months ending in May, total PCE prices rose 3.8%. Excluding the volatile food and energy categories, core PCE prices rose 4.6%. In June, the 12-month change in the Consumer Price Index, or CPI, came in at 3.0%, and the change in the core CPI was 4.8%. Inflation has moderated somewhat since the middle of last year. Nonetheless, the process of getting inflation back down to 2% has a long way to go.
Okay.
Despite elevated inflation, longer-term inflation expectations appear to remain well anchored, as reflected in a broad range of surveys of households, businesses, and forecasters, as well as measures from financial markets. The Fed's monetary policy actions are guided by our mandate to promote maximum employment and stable prices for the American people. My colleagues and I are acutely aware that high inflation imposes significant hardship as it erodes purchasing power, especially for those least able to meet the higher cost of essentials like food, housing, and transportation. We're highly attentive to the risks that high inflation poses to both sides of our mandate, and we are strongly committed to returning to inflation to our 2% objective. At today's meeting, the committee raised the target range for the federal funds rate by a 1/4 percentage point, bringing the target range to 5.25% to 5.5%. We are also continuing the process of significantly reducing our securities holdings. With today's action, we've raised our policy
Do you think
5.25 percentage
going
points
to an NYU would give you better connections than going to Harvard or Yale?
the most interest
Oh,
rate
I don't know, not necessarily.
economy, particularly housing and investment. It will take time, however, for the full effects of our ongoing monetary restraint to be realized, especially on inflation. In addition, the economy is facing headwinds from tighter credit conditions for households and businesses, which are likely to weigh on economic activity, hiring, and inflation. In determining the extent of additional policy firming that may be appropriate to return inflation to 2% over time, the committee will take into account the cumulative tightening of monetary policy, the lags with which monetary policy affects economic activity and inflation, and economic and financial developments. We will continue to make our
Bouncing higher now.
by meeting, based on the totality of the incoming data and the implications for the outlook for economic
S&P 500 is running with it now.
balance of risks. We remain committed to bringing inflation back to our 2% goal.
Oh, you're just saying you would know more people in the city because it's in New York. I don't know if that's necessarily true.
Inflation is likely to require a period of below-trend growth.
I mean, the people that you're going to meet that you really want to know are going to be people at the banks, right? So you want to work at a bank.
Stable prices.
You can get there many, many different ways.
To conclude, we understand that our actions affect communities, families, and businesses across the country. Everything we do is in service to our public mission. We at the Fed will do everything we can to achieve our maximum employment and price stability goals. Thank you, and I look forward to your questions.
Mr. Chairman, thank you. You have, I think, a couple times in your opening remarks talked about this language in determining the extent of additional policy firming that may be appropriate. Should we take that to mean that additional hikes are likely on the way? And should we also believe that all future meetings, say September and November, are live, or are you in a every other meeting mode? Thank you.
So we haven't made a decision to go to every other meeting. It's not something we've looked at. We're going to be going meeting by meeting, and as we go into each meeting, we're going to be asking ourselves the same question. So we haven't made any decisions about any future meetings, including the pace at which we'd consider hiking. But we're going to be assessing the need for further tightening that may be appropriate. You read the language, to return inflation to 2% over time. I would say that the intermeeting data came in broadly in line with expectations. Economic activity remained resilient. Job creation remained strong while cooling a bit. And the June CPI report actually came in a bit better than expectations for a change. And the
All you need to know is me.
of course, was welcome, but it's only one report.
No, in terms of where you go to school, I would pick the school based on the strength of their quantitative finance and market microstructure programs.
Reading, but we don't know that, and we're just going to need to see more data. So what are we going to be looking
Or Ivy League.
be the whole broader picture, and starting with we're looking for moderate growth, right? We're looking for
I should try asking some people on
economy coming into better,
best colleges.
including in particular in the labor market. We'll be looking at inflation. We'll be asking ourselves, does this whole collection of data, do we assess it as suggesting that we need to raise rates further? And if we make that conclusion, then we will go ahead and raise rates. So that's how we're thinking about the next meeting, and how we're thinking about meetings going forward potentially. But we're now mainly thinking about the next meeting. I will also say, since we're talking about it, between now and the September meeting, we get 2 more job reports, 2 more CPI reports. I think we have an ECI report coming later this week, which is Employment Compensation Index, and lots of data on economic activity. All of that information is going to inform our decision as we go into that meeting. I would say it is certainly possible that we would raise funds again at the September meeting if the data warranted, and I would also say it's possible that we would choose to hold steady at that meeting. We're going to be making careful assessments, as I said, meeting by meeting. And I'll close by saying we've raised the federal funds rate now by 525 basis points since March 2022. Monetary policy, we believe, is restrictive and is putting downward pressure on economic activity and inflation.
If I could just briefly follow up on something you said there.
This sure has been a wavy ride so far.
In line with expectations. Does that mean there's unlikely to have been a change in the overwhelming outlook of...
Martin Ciccarelli was...
I'm just going to go back to
I
what
kind of wonder if that guy has been intentionally trolling everybody because he keeps posting stuff that's are you crazy?
we're going to be looking at all of that and making that assessment then. And
He must be trolling.
we did have the one good reading, and of course we welcome that, but it's just one reading, as everybody knows. And we've seen this before in the data. Many forecasts call for rates for inflation to remain low, but we just don't know that until we see the data. So we'll be focusing on that.
Gina. Thank you. Thanks for taking our questions, Chair Powell. Obviously, you upgraded the language around growth in the statement today. We've seen the Barbie movie numbers. We've seen everyone going to Taylor Swift concerts this summer. It seems like the American consumer is in pretty good shape. And it does...
Wait, Taylor Swift indicator? What?
It's doing well. And I wonder from your perspective, if that continues, if we see growth not just stabilizing, but performing well this summer, is that a problem because it's inflationary?
Dude, the E-mini is taken off.
Suggests that a soft landing is more likely. Just how are you thinking about that sort of trajectory?
Yeah, so I would say it this way. The overall resilience of the economy, the fact that we've been able to achieve disinflation so far without any meaningful negative impact on the labor market, the strength of the economy, overall, that's a good thing. It's good to see that, of course. It's also, you see consumer confidence coming up and things like that. That will support activity going forward. But you're right, though. At the margin, stronger growth could lead over time to higher inflation, and that would require an appropriate response from monetary policy. So we'll be watching that carefully and seeing how it evolves over time.
I forget, who is she from?
Neil. Thanks, Chair Powell. Neil Irwin from Axios. So as you referenced earlier, in the intermeeting period, soft CPI, jobs reports, still strong but moderating, JOLTS look good. So if you're data dependent, why not pause again? Why not stay on hold? Why not take another meeting off when the data was at least cutting in the direction you want to see?
Now they're really buying it.
So if you go back to
See, like real
what we're trying to do,
volume is pouring into the treasuries here now,
to bring inflation down to 2%.
and rates are dropping.
Meeting, we wrote down our individual
I mean, 112 even is still
take, and the meeting
pretty mild,
was
given more recent prices,
So I would say
but
we looked at the interim,
real strong flow coming through here.
as I mentioned, broadly consistent, not perfectly consistent, but broadly consistent with expectations, and it
Maybe worth
and took another step.
playing.
And that's, a labor market that continues to be strong, but gradually slowing. I mentioned that the inflation report was actually a little better than expected, but we're going to be careful about taking too much signal from a single reading. And growth came in stronger than expected. So that's how we look at it, and so we did take that step today.
Nick.
Nick Timmeros of the Wall Street Journal. Chair Powell, markets widely believe the median FOMC participants' inflation forecast from June for the fourth quarter of this year will be too high, given autos and shelter, and that by September that may warrant a downward revision in the inflation forecast of 20 to 30 basis points. Would that type of inflation progress be enough to hold rates steady from here, or do you need to see below-trend growth and decelerating labor income growth to be convinced that you've done enough?
So it's hard to pick the pieces apart and say, how much of this and how much of that. We'll be looking at everything. And, of course, we'll be looking to see whether the signal from June CPI is replicated or the opposite of replicated, or whether it's somewhere in the middle. We'll be looking at the growth data. We'll be looking at the labor market data very closely, of course, and making an overall judgment about that. It's the totality of the data, I think, but with a particular focus on making progress on inflation.
If I could follow up, last month you said there were benefits to moderating the pace of increases because it would give you more information to make decisions. Would another CPI report like the one we just had in June allow you to at least maintain that slower pace and defer until the fall any decision on whether you need that second rate hike?
So I'm just going to tell you again what we're going to do in September. We're going to look at 2 additional job reports, 2 additional CPI reports, lots of activity data. And that's what we're going to look at, and we're going to make that decision then. And that decision could mean another hike in September, or it could mean that we decide to maintain.
That right there, you.
Again, the question we're going to be asking ourselves is the overall signal one that we need to do more, that we need to tighten further? And if we get that signal whenever we get it, then, and that's the collective judgment of the committee, then we will move ahead. If we don't,
Dollar is getting crushed here.
we'll have the option of maintaining policy at that level. But it's really dependent so much on the data, and we just don't have it yet.
Chris.
Hi, Chris Rugaber at Associated Press. So consumer confidence in the economy is rising, likely in large part because of the declines in headline inflation. You also see wages are also rising faster than prices now after trailing them for a long time. How much are Americans truly harmed by inflation at its current level, headline level of 3%? And with that in mind, when do you put some weight back on the employment side of the dual mandate?
So I guess I'd say it this way. First, it is a good thing that headline inflation has come down so much, because that's,
Feeling the sleepiness come over me here,
I would say that
even though I'm taking sim trades.
down that much almost creates a
Yeah, yield is definitely falling.
broad sense that the public has
They're stopping a little bit here, though.
turn, we hope, help inflation continue to move down. So you are really, sorry, what your question was?
Well, I mean, you've talked for many press conferences now about the harm created by inflation, how hard it is for people. So how much of that are we still seeing with inflation now down at 3?
So I guess I would put it this way. I'd say it this way. It's really a question of how do you balance the two risks, the risk of doing too much or doing too little. And, I would say that we're coming to a place where there really are risks on both sides. It's hard to say exactly whether they're in balance or not, but
Not bad.
as our stances become more restrictive and inflation moderates, we do increasingly face that risk. But we need to see that inflation is durably down that far. As you know, we think, and most economists think, that core inflation is actually a better signal of where headline inflation is going, because headline inflation is affected greatly by volatile energy and food prices. So we would want core inflation to be coming down, because that's what we think core is signaling where headline is going to go in the future. And core inflation is still pretty elevated. There's reason to think it can come down now, but it's still quite elevated. And so we think we need to stay on task, and we think we're going to need to certainly hold policy at a restricted levels for some time, and we need to be prepared to raise further if we think that's appropriate.
Well, and then if inflation were to, just a quick follow.
Sometimes when I get super focused, I get sleepy.
More, I mean, how much of an increase in unemployment do you think is acceptable to get that last bit of inflation? People are talking about the potential difficulty of the so-called last mile of inflation. So, but how much unemployment do you think is justified to get down that last?
So it is a very positive thing that actually the unemployment rate is the same as it was when we lifted off in March of 22 at 3.6%. So that's a real blessing, and that we've been able to achieve some disinflation. And we don't seek to, it's not that we're aiming to raise unemployment, but I would just say the historical record, we have to be honest about the historical record, which does suggest that when central banks go in and slow the economy to bring down inflation, the result tends to be some softening in labor market conditions. And so that is still the likely outcome here. And we hope that that's as little as possible. We have to be honest that is the likely outcome. The worst outcome for everyone, of course, would be not to deal with inflation now, not get it done. Whatever the short-term social costs of getting inflation under control, the longer-term social costs of failing to do so are greater, and that the historical record is very, very clear on that. If you go through a period where inflation expectations are not anchored, inflation is volatile, it interferes with people's lives and with economic activity, and that's the thing we really need to avoid and will avoid.
At this point, you say the policy is restrictive, but all year long we have seen growth surprise to the upside, unemployment to the downside. So I'm wondering, by definition, should you be restrictive enough right now under these conditions? Do you think you might need to do more? Because I'm curious about what you see as inflation dynamics now. Is the economy still moving in a direction where it creates more inflation? People talk about base effects and higher energy costs, and now we have some large labor settlements. Or is the economy disinflating, and you're able to go back to the old Fed policy of opportunistic disinflation?
So I'll just say, again, the broader picture of what we want to see is we want to see easing of supply constraints and normalization of pandemic-related distortions to demand and supply. We want to see economic growth running at moderate or modest levels to help ease inflationary pressures. We want to see continued restoration of supply and demand balance, particularly in the labor market, and all of that should lead to declining inflationary pressures. Now, what we see is those pieces of the puzzle coming together, and we're seeing evidence of those things now. But I would say that what our eyes are telling us is that policy has not been restrictive enough for long enough to have its full desired effects. So we intend, again, to keep policy restrictive until we're confident that inflation is coming down sustainably toward our 2% target, and we're prepared to further tighten if that is appropriate. And we think the process, still probably has a long way to go.
Well, do you think under current conditions you are restrictive enough unless something changes?
Well, I think we think, today's rate hike was appropriate, and I think we're going to be looking at the incoming data to inform our decision at the next meeting about is the incoming data telling us that we need to do more, and if it does tell us that, collectively, if that's our view, then we will do more.
Thank you. Colby Smith with the Financial Times. If September is in fact a live meeting, how does that square with the need for a more gradual tightening pace that you spoke of last month in explaining the rationale for holding the funds rate steady at the June meeting?
So a more gradual pace doesn't go immediately to every other meeting. It could be 2 out of 3 meetings, right? It just means if you're slowing down. The point really was to slow down the decision cycle as we get closer and closer to, we think, our destination. And I wouldn't want to go automatically to every other meeting because I just don't think I think it's not an environment where we want to provide a lot of forward guidance. There's a lot of uncertainty out there. We just want to keep moving at what we think is the right pace. And I do think it makes all the sense in the world to slow down as we now make these finally judged decisions. And so that's what we did. And so I think it's possible, I mentioned before, it's possible that we would move at consecutive meetings. We're not taking that off the table, or we might not. It's really going to depend on what the data tell us. That's the best we can do.
Just really want to go to sleep. Hey, that got
Every
filled.
other meeting is the lowest tightening frequency, let's say. It could be, longer intervals in between as well.
I think we're going to look.
I should be like super excited and into it right now, but I'm just not. I'm just like so tired.
And
for whatever reason.
sort itself out.
Guess it's nap time. 1 o'clock nap time.
Thanks. Howard Schneider with Reuters. Among your colleagues, there have been people who've said they feel that very little transmission has taken place so far from monetary policy into the economy, and there are those who feel, they say, it's happened very fast this time and it's kind of up to date. Where are you on that continuum?
So there's a long-running debate about the lags between changes in financial conditions and the response to those changes from economic activity and inflation, right? So we know that in the modern era, financial conditions move in anticipation of our decisions, and that has clearly been the case in this cycle. So in a sense, the clock starts earlier than it used to, but that doesn't necessarily change the process from that point on, and it's not clear that it has. I'll tell you what we know and then what we don't know. We know that financial conditions affect economic activity and inflation with a lag that can be long and variable, or lags, plural, that can be long and variable.
Firms allowed to have people in the room that I don't know if that would really be a huge advantage.
Of the broader uncertainty.
Although it seems there is,
So I'll tell you how
we have some suspicions, let's put it this way, we have some suspicions that the banks may have some insight into what happens in the actual meeting, because we've had so many times where we've seen strong moves the morning of the
mainstream
announcement, and it ended up predicting a significant change,
of the longer-term rate.
So it may be that information from the meeting gets leaked.
Meaning that it is putting downward pressure on economic activity and inflation. We'll keep monetary policy restricted until we think it's not appropriate to do so. So that's how I think about it. I mean,
trying to get ahead of people during the press conferences, I don't think that's the best way. Like, especially since what the market can do based off of that can be so random sometimes, right? So even if you had an advantage, I don't know if you'd really be able to consistently make money from it, because you just end up taking big losses sometimes.
We have to be ready to follow the data, and given how far we've come, we can
to say a minute before he said it, I think it'd still be hard to make money from it.
Credit side, I'm wondering if you saw anything in the latest sluice data that made you think you're getting.
Yeah, I recall a few months back where we saw a move like 2 minutes before the announcement.
The bank lending data really is.
And what I'm talking about is like you'll have it the morning of the announcement. Because remember, there's a meeting and it's a 2-day meeting, and it goes the Tuesday and the Wednesday. So they were actually in the meeting like in the morning today, I believe.
Expect you've got lending conditions tight and getting.
Oh, did I get another contract here?
Weak demand, and
No,
I never. Of pretty tight credit conditions in the economy. I think it's really hard to tease out how much of that is from this source or that source. But I think what matters is the overall picture is of tight and tightening lending conditions, and that's what this sluice will say.
Rachel.
Hi, Chair Powell. Rachel Siegel from the Washington Post. Thanks for taking our
Well, I don't have any algos on. I've been scalping this range here.
Inflation has fallen, and what share of that credit you would give to factors that don't stem directly from rate hikes, or that might be within your control at all, like easing supply chains and a drop in energy prices over the past year?
Yeah. So, interesting question. So, let me start by saying that the inflation surge that we saw,
I'm going to stay down there. It really seems like they want to go.
collision of elevated demand and constrained supply, both of which followed from the unprecedented features of the pandemic and the response from fiscal and monetary policy. And we've always expected that the disinflationary process would stem from both from the normalization of those broad pandemic-related supply and demand conditions and from restrictive monetary policy, which would help return the balance between supply and demand by restraining demand. And we think that's broadly what we're seeing. So to go break it down a little further, of course,
Well, look at that big old order at 05 in the 5-year.
down, mostly due to reversal of the effects from the war in Ukraine, and that's a good thing. And the public experiences that, as I mentioned earlier. For core inflation, I'd say there has been a role for both factors, both that I mentioned. Clearly, for goods, normalization of supply conditions is playing an important role, as is the beginning of the reversal of spending back into services and away from goods. Take autos as an example. The combination of an increase in sales and inventories, while vehicle inflation has decelerated, points to a substantial role for supply. But there's also a role for demand, as you know.
Yeah, it doesn't sound like they're too anxious to raise rates right now. Yeah.
Services inflation now starts to move down. Clearly, higher rates have.
So this is again where it's kind of like I don't feel like I'm getting any new information. I'm not hearing anything that's really surprising to me, and yet the market is just popping off, right?
Forward in particular.
Do you see those big spoofs there? So now there are two big ones at 05 and 047 in the 5-year, and there was briefly one over here in the 10-year at 02.5.
Sources of disinflation are playing an important role.
See. And just to follow up, do you think that of those two sources, that core will rely more heavily on seeing an impact from rate hikes, or is there a more even split there too?
I think monetary policy is going to be important going forward, because we're sort of reaping now the benefits of the reversal of some of the very specific pandemic things. We're seeing that with goods in particular, with supply chains and shortages moving, and we're seeing. So I think going forward, monetary policy will be important, particularly in the sector, in the non-housing services sector.
Thank you, Chair Powell. First, let me compliment your tie, the choice of tie. So thanks for taking our question. So the Beige Book, it said, input cost pressures remain elevated for services firms, but eased notably for manufacturing sector. Is that an indication that there's a wage inflation?
It's going. I guess that was a sign.
On the wage inflation without...
During a Federal Reserve meeting, I'm a little bit more...
It's really an indication.
I'm going to pay a little bit more heed to a large order.
What was the first part of it?
So wage inflation, like how do you target wage inflation without...
Because there's lots of things going on. You're not going to put a big order out there like that if you didn't intend it to get filled in, because... could be a lot easier for it to get filled in a situation like this. So
wages have actually been gradually moving.
I don't think he puts that out there unless he's serious.
That would be consistent over a long period of time.
Look at the stack. Look at the stack. This is squeezing hard.
Labor market demand is cooling. You can
no, Phil.
Surveys by workers and businesses who see that. You can.
Okay, so this is the pit close. So I'm going to take this contract out here.
Creation in the establishment survey has still at a high level, but it was at really an extraordinarily high level.
I should have realized that this was the pit close coming.
You see cooling, particularly in private sector, in the last,
Doesn't mean that the move is over, but
you see that, and it's happening at a gradual pace. So that's actually not a bad thing in a sense, because if what we see is a labor market, very strong demand for labor, which is really the engine of the economy. People are getting hired. Many people going back to work. getting wages, spending money, and that's really what's driving the economy, but that it's gradually slowing, it's gradually cooling, that's a good prescription for getting where we want to get.
But still, we see a push to raise minimum wage. We're seeing a lot of unions go on strike or threaten strike. And the common thing is they come out with agreements like big pay increases, like UPS, and we have the auto workers coming up. Are you concerned then about a trend of series of big unions, these contract pushing wage inflation then?
Not for us to comment on contract negotiations. Not our job, not our role. We monitor these things and we'll keep an eye on them. But really, that's something that's handled at that level. And
NASDAQ trader Salim tried putting some links in Discord today, and they got deleted because
Hi,
he
Victoria.
wasn't verified yet.
I wanted to ask about the SEP, which suggests that you would cut rates as overall and core PCE get to around or under 3%. And so I'm wondering, is the level of inflation what's sort of important there as you think about getting to 2% and when you might start cutting rates? Or is the speed at which inflation is falling also important?
I think you'd take both into account. I think you'd take everything into account when you start cutting rates. It would depend on the
Schwab doesn't allow you to trade leveraged ETFs?
down rate cuts.
That's interesting.
It just is a.
They have to look into their specific rules.
We're comfortable that it's coming down and it's time to start cutting rates. I think, but I mean, there's a lot of uncertainty between what happens.
They may require you to like for me to trade options, they have to send you a thing and you.
What happens there?
Make these attestations and stuff like that. You might need something like that.
The high twos, you wouldn't necessarily cut rates.
I'm not saying that at all. I'm not giving you any numerical guidance around that. I'm saying we'd be comfortable cutting rates when we're comfortable cutting rates, and that won't be this year, I don't think. It would be, many people wrote down rate cuts for next year. I
feel like in a situation like this that it's really silly for the reporters to try and trip him up like that, because he's not going to make that mistake.
It'll be about how confident we are.
And it wouldn't be good for the markets if he did make that mistake. And I feel like that sort of stuff that you should just leave it alone.
A good part of Wall Street has become more confident that the Fed is going to be able to engineer a soft landing, and they've reduced their forecast for recession. And I'm wondering if the staff has changed its view on the likelihood of recession being likely, and if you personally have changed your view in terms of becoming more confident that you can achieve a soft landing.
So it has been my view consistently that we do have a shot, and my base case is that we will be able to achieve inflation moving back down to our target without the kind of really significant downturn that results in high levels of job losses that we've seen in some past instances, many past instances of tightening that look like ours. That's been my view. That's still my view, and I think that's sort of consistent with what I see today. So, but it's a long way from assured, and we have a lot left to go to see that happen. So the staff now has a noticeable slowdown in growth starting later this year in the forecast, but given the resilience of the economy recently, they are no longer forecasting a recession.
Okay.
I just want to note that that our staff produces its own forecast, which is independent of the forecast that we as FOMC participants produce. Having an independent staff forecast as well as the individual participant forecast is really a strength of our process. There's just a lot of, I think, constructive diversity of opinion that helps us make, informs our deliberations, helps us make, I hope, better decisions.
There's still some relatively large lots left behind in the 5-year.
Inflation has come down, and you still,
despite the bid session being done.
does that add to the optimism?
I wouldn't use the term optimism about this yet. I would say, though, that there's a pathway. And yes, that's a good way to think about it. We've seen so far the beginnings of disinflation without any real costs in the labor market, and that's a really good thing. I would just also say the historical records suggest that there's very likely to be some softening in labor market conditions, and consistent with having a soft landing, you would have some softening in labor market conditions, and that's still likely as we go forward with this process. But it's a good thing to date that we haven't really seen that. We've seen softening through not through unemployment, not through higher unemployment. We've seen softening through job openings coming down part of the way back to more normal levels. The quits rate, so people are not quitting as much. We've seen participation, people coming in.
I don't know if I'm going to get the price I want.
Has improved, which is...
It touched it, but it didn't fill me, and I'm still sitting up there waiting.
Which was quite overheated.
Cancel. I tried moving it down for the close, and then it's like, well, I guess I might as well.
Cooling, and that's very healthy.
So I'm hoping that after the press conference that they make another little move, and then I would get filled.
Jeff Cox from CNBC.com. You and other Fed officials in the past have suggested that you don't need to keep hiking until inflation hits 2%, that as long as you see continued progress. So I'm wondering, how close do you need to get with the inflation numbers coming down? How many months of data do you need to see that will give you sufficient confidence? And how far does this fight need to go before you're willing to kind of declare victory on it?
So
Mitch McConnell escorted away from cameras after freezing mid-press conference, huh?
2%, it would be a prescription of going way past the target. That's clearly not the appropriate way to think about it. So, in effect, if you look at our forecasts, the median participant, and again, these are forecasting out years, so take them with a grain of salt, but people are cutting rates next year because the federal funds rate is at a restrictive level now. So if we see inflation coming down credibly, sustainably, then we don't need to be at a restrictive level anymore. We can move back to a neutral level, and then below a neutral level at a certain point. I think we of course would be very careful about that. We'd really want to be sure that inflation is coming down in a sustainable.
Is that him having a stroke?
I'm not going to try to make a numerical assessment of when and where that would be, but
at first I was like, oh, that's kind of low for them to make a big deal out of that on Reddit. But now I'm looking at it and I'm like, oh,
you got to 2%.
I think he might have just had a stroke, dude.
And you'd start cutting before you got to 2% inflation too, because we don't see ourselves getting to 2% inflation until, all the way back to 2 until 2025 or so. So.
Transient ischemic attack. It's a temporary period of symptoms similar to those of a stroke.
Yahoo Finance. It's been over 4 months since a handful of regional banks, including Silicon Valley Bank, failed. When you look at credit conditions now, given Bank of California's acquisition of PacWest, does this acquisition suggest the full impact has not been felt, or are you comfortable saying that we've seen most of the ripple effects that may have occurred at this point, and how does this play into your outlook for policy?
So I don't want to comment on a particular merger proposal, but I will say things have settled down for sure out there. Deposit flows have stabilized, capital and liquidity remain strong. Aggregate bank lending was stable quarter over quarter and is up significantly year over year. Banking sector profits generally are coming in strong this quarter, and overall the banking system remains strong and resilient. Of course, we're still watching the situation carefully and monitoring conditions in the banking sector. In terms of the actual effect on, if you think of a particular set of banks that were affected because of their size and business model and things like that were more affected by the turmoil in March than others, it's very hard, as I mentioned, it's very hard to sort of tease out the effects on this very large economy of ours from them tightening. They may be tightening a little bit more, probably are, than other banks. The SLOOS has been telling us for more than a year that banking conditions...
Man, if it comes back to here, I'm going to be a little disappointed.
And that will restrain economic growth. So I think we have to take a step back from...
The S&P is giving it all up.
At the overall picture, which is one of tightening credit conditions, and that's going to restrain economic activity. It is a restraining economic activity. So that's how I would look at it.
And how is that informing your outlook for setting policy?
So I think that is an expected result.
So I'm gonna take this off.
Is that bank credit conditions bank lending conditions would tighten as well. And so the question is it more effective this time because of what happened in May? I just don't think we know that. I think we're.
So did they not like what he just said about the banks and stuff? Because that turned back around so way faster than I realized.
Go ahead and raise
it. I was like, oh, treasuries, they came back like 4 ticks, and then look at the evening. What? They're at the lows. What?
seems like the economy is weathering this well, but of course we're watching it carefully and expect to continue to do that.
Hi, Chair Powell. Thanks for taking our questions. Megan Casella with Barron's. I wondered on wages if you were at all concerned about any inflationary impact of wages now outpacing inflation, which is likely contributing to the boost in consumer sentiment.
That was a good thing I got out of there.
That we've been seeing.
Well,
Granted, it was just a sim trade, but
means real wages are positive. Again, that's a great thing. Of course, we want that. We want people to have real wages, but we want wages to be going up at a level that's consistent with 2% inflation over time. As I mentioned, nominal wages have been coming down gradually, and that's what we want to see. We expect to see more of that. That's just more of what's consistent over a longer period of time. We don't really think that wages were an important cause of inflation in the first year or so of the outbreak. But I would say that wages are probably an important issue going forward. Labor market conditions broadly are going to be an important part of getting inflation back down. And that's why we think we need some further softening in labor market conditions.
This goes sort of to the balance of risks question, but you mentioned at the start how you're keeping an eye on consumer activity and whether there might be some sort of a rebound there. And I'm curious what the Fed's explanation would be to families if further interest rate hikes start to hit the labor market, start to drive that sentiment back down. What's the message there of why you continue to keep rates elevated or to raise them?
Well, we have a job assigned to us by Congress to get inflation under control. And we think the single most important thing we can do to benefit those very families, especially families at the lower end of the income spectrum, is to get inflation sustainably under control and restore price stability. We think that is the most important thing we can do now, and we're determined to do that. And I would just point out that the people who are the most hurt by inflation right away are people who are on a low fixed income who, when you're talking about travel.
I don't know if there's anything significant coming on with Taiwan anytime soon.
Clothing, food, things like that. Those, if you're
haven't seen anything to suggest that.
Go up, you're in trouble right away. Even middle class people have some resources and can absorb inflation. People in the lower end of the income spectrum have a harder time doing that. So we need to get this done, and the record is clear that if we take too long or if we don't succeed, that the pain will only be greater. So that's how I would explain what we're doing.
Thank you, Chair Powell. Simon Rabinovich with The Economist. You had said last month that this meeting this week was going to be a live one. In the event the market had assigned a roughly 99% probability to the rate move that you announced today, the decision was, of course, unanimous, and the statement was basically unchanged from last month. So may I ask, to what extent was the meeting actually a live one? Was there ever any doubt over the past 2 days about what the decision was actually going to be?
Well, I mean, you could. I would say there's a range of views on the committee, and when you see the minutes in 3 weeks, you'll see that there's a range of views about what we should do at this meeting and what we should do at the next meeting. It's a process that we go through. Many times when we go into a meeting, the decision is not, fundamentally in doubt. Nonetheless, we have the meeting, and some meetings are less uncertain than others, and I'll just leave it at that.
Evan Reiser, Market News International. Thank you, Chair Powell.
Market is only pricing 20% probability right now of a hike in September.
The stock market, etc. What does that mean for the Fed and being sure that inflation will come down to target?
What is it with this tie today? It is a nice tie, isn't it? It looks like it's made out of a nice material. I wonder where he got it.
We're of course very focused on rates in our own.
I still prefer the full Windsor knot, though.
Going to use our policy.
I don't like the half Windsor. It always comes out a little ski-wampus. Doesn't look as neat.
The implication is, we will do what it takes to get inflation down, and in principle.
Okay, so I've got
financial conditions get looser.
Appointment that I need to be to in 40 minutes.
Those financial conditions.
We will end at the bottom of the hour, or when Powell ends.
Over time, that we get where we need to go.
If I could also ask about the SEP from June that showed rate cuts. Do you expect the Fed to cut nominal rates next year while also continuing QT?
So that could happen. The question is,
Eating that dude, like when that bull run came in, both the treasuries and the equities, that was a pretty wild trend, right? Like
down.
They really wanted it.
What are restrictive levels to more normal levels?
It's so these guys over in equities have got to be hurting, man.
QT. So
because they puked it all.
You depending on where you
and it looks like they're from the cumulative delta that they're still holding it out. That these guys are holding out that the equities will rise back up after he's done speaking or something. So if the treasuries were to make a push lower into the close, that could be very, very painful for the futures.
Thanks, Chair Powell. Kyle Campbell with American Banker.
How many ties? I think he wears a different one every time, doesn't he? Thanks for the donation, by the way. You guys have been so great. We got 2 donations today. What is?
And assuring that they're ready to use that.
I appreciate it, guys. But remember, we don't need it. Nothing matters because there's aliens. We're going to have alien technology soon. Anyways, it's like...
Show that they are prepared to use it.
So that's a very important thing, yes, and yes to both sides of that. You know,
I'm like, I just changed my couch, and I'm like...
use the discount.
But I'm not going to need it because in a year from now we'll have anti-gravity couches.
We did find, as you know,
like
in the events of March, and that that it's a little clunkier. It can be a little clunkier and not as quick.
I just give it to you so you'll answer my obnoxious question.
Why not be in a situation where you're just much more ready in case you need to?
Yeah, we haven't done too much of that this time because I've been focused on other things. But I sure do like to look at what the journalists are wearing and stuff.
Mr. Chairman,
how good their cameras are. I'm so glad we're past the Zoom era of FOMC meetings. That was terrible sometimes.
Where do you see that situation and balance or lack thereof right now, particularly with the constrained inventory?
Bankrate.com, that's not one I've heard of before.
Otherwise be coming onto market at a time when existing homeowners are reluctant to move.
Cutting you through life's financial journey.
30-year fixed rate mortgage still around 7% on the heels of Fed tightening.
We should start like a more general finance channel with a bunch of different creators, and I can be the expert on Federal Reserve policy, and then I'll get to go to that meeting and ask questions. That's what we got to do.
Existing homes, there are many people who have.
Did you create the speculatorseth.com? I did all the work for that.
Situation they're not going to because they have so much value in their mortgage.
Imagine if aliens
really, really tight.
Well, I'm just saying, guys.
There's a lot of supply.
And
there are people coming in.
I'm not saying I know anything because I don't. Okay, I'm just speculating, as speculator Seth is wont to do. Okay.
Hopefully more supply.
But somebody was trading Lockheed Martin on that press meeting this morning. Look at that.
We'll go to Nancy for the last question.
Explain that.
Hi, Chair Powell. Nancy Marshall-Genzer with Marketplace. Russia has pulled out
People are literally trading
shipments of grain, safe passage.
I mean, it's small trades and it's a temporary trade, but literally trading off of UFOs.
Just wondering, how could that contribute to higher food prices?
Because I guess somebody thinks that it will be bad for Lockheed Martin when they find out when it's revealed that they've been hiding aliens from the government.
Black Sea Grain Initiative does raise concerns about global food security, particularly for poorer countries that import a large share of their food. Grain prices did go up on this news, but they remain well below their peaks of last spring. And the moves that we've seen so far, I would say, are not expected to make a significant contribution to U.S. inflation. Of course, we will be watching that situation carefully.
So you don't think it would have a big effect on Fed policy at this point?
You wouldn't say so?
Well, let me come through and read a little bit of Twitter's here.
Thanks.
Mohammed A. Elarian, FOMC statement is as expected across the board. Oh, okay, that's the end of the press conference. A little bit early. Kept the door open to another hike, didn't change its outlook in any significant manner. Jason Furman, the FOMC statement says virtually nothing about their reaction function going forward. Will be interesting to see if we get more of it in the presser. Not so sure that we did. Personally, I think the reaction function implicit in the last FOMC projections is about right. The Fed made the right move today. The risk of persistently high inflation continues to be larger than the risk of a recession. Financial conditions are not particularly tight, even after the fast pace of increases. Whether they raise again should depend on the data a lot incoming. This comes back to this thing that we were talking, kind of hinting at yesterday, which is that because so many companies took out a lot of debt during the pandemic when interest rates were artificially low, and that includes companies like Amazon, Google, etc., right? Because of that, the financial conditions of companies is pretty good. They don't have to take out as much debt on a day-to-day basis anymore. And so when we do raise rates, it doesn't have as much impact. It just doesn't, because the companies aren't actually taking debt. You should make a basket of stocks that increase when more money is sent to Ukraine. No, I want a stock that specifically... See, here's the problem. Again, I want a stock that when we confirm the alien... Like when there are like actual alien corpses in front of Congress and stuff like that, okay? I want to buy the stock that makes money from that. Seems to me like maybe if anybody had one, it's Lockheed Martin. But then Lockheed Martin, this isn't the first time actually, sells into these kinds of events. So it's like the market is concerned that something is going to be revealed to Congress that will be very bad for Lockheed Martin Corporation. But I'm kind of like, they'll forgive him. Right? Whatever it is that Lockheed Martin did, like everybody will be so excited that there's aliens that we'll forgive them. That's probably what they're counting on. Nick Demerose, Power, slowing down the pace doesn't mean we have to move at every other meeting. Slowing the pace could mean going at 2 out of 3 meetings. We can afford to be a little patient. Fed staff no longer forecasting a recession. Okay, positive stock and bond reaction to Powell's comments, but I don't see that the outlook for the Fed has changed much. Still small possibility of rate hike in September and greater chance by November. And then, about 5 minutes later, Steve Leishman tweets, and then the market gave it all back. No real reason for the rally as far as I could tell, so not surprised it went the other way. I don't know about that. I think that he was kind of saying like positive things, and it just kind of like builds and builds and builds. And then, it was like off to the races. And then that kind of got short circuited by the treasuries and the close and all that. But, man, I don't know. I don't see what it was that they were talking about that would cause a reaction like that. But it sure seemed like the market shifted. But I forget what it was that they were talking about. There was something she was talking about that I was like, well, I could maybe see them selling off on that, but yeah, I don't see it. The aliens are hiding in Ukraine. They need money. Thanks, Biden. Well, I'm sure that if there's aliens, that they're not telling Biden about it. The whole thing is just nuts to me. I really like every time I read the headlines about this thing. It's like, no, he did not say that. This can't be real. There's no way this is real. Is it really like going to come all out that like somebody lied to him and it was all a hoax? Or I don't know. Like the whole thing is just crazy. Or are there really like it's just too fantastical? It really will be like a life-changing event if it happens. There will be like human history before and human history after. Like, really? And like the thing I'm concerned about is that a profound move towards like nihilism and existential dread will overtake the population if it's proven that aliens are real. You know? It really does kind of make you wonder if they're kind of like, because the thing to me is like, if there is the technology for aliens to get to Earth, then that means that the things that are actually possible with technology are like beyond our wildest dreams, you know? And I think that does kind of bring in some existential dread in terms of like, what's if you can really do anything, then what's the point to existence? But it's just like Rick and Morty, right? That's the whole thing with Rick and Morty. Is like, okay, when you can go to different dimensions and go and do anything that you want, like, what's the freaking point? And it cheapens everything. Oh, there you are. Hey, by the way, I saw you try to put some messages in Discord, but you hadn't been like verified yet. So you should be able to post them now. I don't know what you were posting. It was a YouTube video. I saw some aliens at Vaughn's. I think they were the Nordic species. That's right. I forgot about that. You're right, because there's the ones that are like the Nordic ones that are kind of like humans, and then there's the like the little gray ones. But like here's the thing: is that the little gray ones, they're not willing to call them aliens. That's the thing. They say non-human intelligences. It's a non-human intelligence. We don't really know if they're aliens. They could be from Earth, but non-human and been hiding from us the whole time or something like that. Or they could be genetically engineered drones. Okay, this is getting too weird. I'm sure that we had like a flurry of activity today, and I bet you that like it'll just die and you won't hear about it again until after he speaks to Congress, and then maybe if people in Congress decide to say crazy, like, okay. Anyways, Treasury is kind of stuck around 112. Going to be interesting to see if the equities take a little plunge. I think that they're probably going to pull it out and be okay, but if it does take a little bit of a plunge, it sure would be ugly, right? So, but I got to get going, guys. So I will see you tomorrow. In the meantime, stay excellent, team.